Good day, everyone. One of the students enlightened me a bit on the course, and he was particularly interested in knowing the real-life applications of the patterns that we are discussing in this course. So I've decided to create a section on the course whereby I'll be illustrating real-life trades using the candlestick patterns that we have talked about in this course. So you're gonna find out that I'll be updating as we go, because I'm not gonna update with the hindsight information. I need to update it with real-life market data. So starting from today, already I have entered a position on GBP CHF, British pound against the Swiss franc, whereby I'm going to highlight for you how you can take a trade using the bullish engulfing pattern. So there are a lot of factors that you have to put into perspective, and most of these factors, they are well explained in my other course titled Institutional Supply and Demand. But for this section here, I'll just be illustrating the pattern. I'm not gonna go into the criteria that we use on determining whether we're gonna go long or we're gonna go bullish short. So if you want to know more about those criteria, then I'll suggest that you enroll to the Institutional Supply and Demand course, and you get more information in regards to how we define a position, whether long or short. So I'm going to illustrate a bullish engulfing pattern that has resulted in a long trade being taken on British pound against the Swiss franc. So looking at the chart GBP CHF, we can clearly see that market tested a strong area of demand, right? We've got a demand zone there, and again I'll illustrate that this is defined clearly and explained in detail in the Institutional Supply and Demand course, which you can enroll with so that you can understand much better. So obviously when price tested demand, we expect price to move to the upside. So now when I was reading the market structure of British pound against Swiss franc, already when I saw that okay, we are testing a demand zone, I dropped down to lower time frames, right? The moment I drop down to a lower time frame, then you're gonna see exactly what we are talking about. On a lower time frame, you can see price was testing this level here, this level of demand, a level where buyers will look to come back into the market. And also you can see the same level is a 70% retracement of this swing low to the swing high, so buyers look to come in. So now in this area here, this is where you're going to be looking for a pattern to trade to the upside. Now this now goes back to all those patterns that we have discussed earlier on, but for now I'm going to illustrate a bullish engulfing pattern. So now if I drop down to an H1 time frame, you can clearly see we had clear price dipped down into our demand zone, and there was a rejection of lower prices. Now I'm gonna go straight to a 15-minute time frame so that you can clearly see where my entry was on this long trade. So now you can see 15-minute time frame with the bullish engulfing candle here, right? And if we took note of that time, that's probably towards New York open. So this candle comes in at 1500 hours GMT plus 2. That's heading into the New York Open. Then we see a clear bullish engulfing pattern. This candle takes out the previous candle, takes it out, and trades to almost 60% of the prior down candle. You can clearly see this is where my entry was. This is where I took off the long trade. You can see with the arrow there. Yes, and this is MT5. It's gonna show you the arrow. So I entered my long position there. Now, where did I put my stop loss? 15 to 20 pips below the highlighted low. Remember the illustration. 15 pips below the previous low. And remember that previous low is coming in on a demand zone. So yes, I entered the position here, and then market traded to the upside and instantly rejected again. For those who didn't place their stop loss properly, they were taken out here, right? Now look where my stop loss is. My stop loss is almost 18 pips away, right, from the low. Now look what happened after, right? This is all New York session. You see, 3:30, then we go 4 o'clock. New York now is what? Open. This is the open of New York session. And look what happened with price. Price rallied all the way up, right? And from my entry point, you can see from my entry point, we've got price rallied all the way to close to 50 pips, right? 50 pips. That's 50 pips in close to, so that's 6 bars, 6 15-minute bars. So that's like 2 hours, right? 50 pips in 2 hours. That is a pretty much good return. But I still expect more momentum to go to the upside, right? I expect more momentum to go to the upside. You can even see on the 30-minute again, we've got a bullish engulf here, which was formed during New York Open. You see, my entry is heading into NY Open, but look, we have a bullish engulfing here that comes during New York Open, and market rallied all the way. But now on this trade here, I'm still expecting further movement to the upside. That's why I will hold this trade. If I go to my H4 chart, I'm still expecting further upward movement. These buyers here to take market to clear up these highs. So that's what I wanted to show you guys to illustrate a bullish engulfing pattern. So as we go, I'll be updating the course with furthermore patterns using real life market data. I wish you good luck and happy trading. Thank you.